Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Hong Kong at SmartCon 2024 by Chainlink. Joining me for the segment, we have Tom Menner. He's CTO of SBI Digital Markets. We're here to discuss key blockchain technology trends that institutions should pay attention to as they explore tokenization opportunities. Tom, it's great to have you with us. Welcome to TradeTalks.
Thank you very much, Jill.
All right, and if you think about those bubbles that you see, thinking about the big words, tokenization is certainly on top there. There seems to be a key theme here. Before we get into that, what recent initiatives has SBI Digital Markets undertaken to facilitate institutional demand for digital assets?
Sure. So SBI Digital Markets, we're based in Singapore, and our focus is on capital markets and digital assets for capital markets and institutional investors in particular. We're part of a much larger financial conglomerate based out of Japan, SBI. And our branch of that family focuses on digital assets. So we have a sister company, AsianX, that does digital marketplace. We have another company that's a joint venture with Zodia, focused on custody. And we have also a group of folks that focus on digital identity and smart contract writing. Again, in our case, we're actually a regulated financial entity. So for us, it's very key focus on that distribution of those assets. They could originate somewhere else. We could originate on behalf of someone else. But in essence, we're bringing the sell side and the buy side together, or at least that's our goal. So there's a number of things that we have to solve for that. One is what's going to be of interest for the buy side? What assets can I bring to the table that I can distribute that would actually generate interest from the buy side? Historically, we found, for example, that just creating a tokenized bond, for example, and a lot of the argument for that was fractionalization, so that Jill can access a $1 million bond or $100 million bond by chopping up in 1,000 tokens. Turns out the institutions really weren't interested in something like that, and they said, well, from an asset class perspective, that doesn't provide anything of value to us. Okay, what would be of value for them? Well, if you can open up new distribution channels, if there are secondary services I could do with that token, such as collateralization or listing on secondary markets, if you can get me into new buy sides, into new markets, multiple markets at the same time, now I'm interested. So we realized that, this is our new focus. How do we bring the sell side origination over to different buy side markets, maybe in different jurisdictions too? It could originate in Singapore, winds up being listed in a market in Thailand. How do we account for that? How do we account for it going across protocol boundaries? Maybe it starts on Ethereum and ends up on Cardano or Hyperledger Fabric or something. And then how do we handle the regulatory aspects to that? Right, that's very, very key. So for us, it's all about that liquidity. The liquidity and that network effect is what's going to provide the value. And then for me, as SBI Digital Markets, I'm solving for the buy side and the sell side, hiding some of that complexity from you guys as much as I can.
Right. So, and that's why tokenization is so attractive to the institutions, because it almost has that built in, if I understand it correctly, that compliance layer when you're thinking about dealing with multiple jurisdictions and different regulatory regimes. So
I think there's different aspects to that. One is, again, what can I tokenize that will be of interest to the buy side? Okay, if it's not fractionalization of a bond, is it real estate? Is it fractionalized gold? Is it brand new asset classes like tokenizing intellectual property or revenue streams? So that may generate the interest on the buy side. Secondarily is which markets is that of interest to? Again, I'm not really targeting the retail market, the consumer with an app on their phone. Maybe it's accredited investors, maybe it's family offices, maybe it's mid-tier, small and medium enterprises. So maybe they have a different risk appetite. Or maybe that investor says, you know what, I want exposure to real estate in the Middle East or in developing countries in Asia, and I'm an investor coming out of Europe. So the tokenization facilitates the transfer of that asset or the representation of that asset. And oh, by the way, maybe I, as the technician, can build in the smart contract some language that says, given this regulatory jurisdiction, follow these conditions. Or maybe post-trade instructions based on, given this asset class in this jurisdiction, do X, Y, and Z. So there's the potential for a lot of operational efficiency to be squeezed out of this. It's the possibility of introducing new asset classes that would be of interest to to the investors. So that's really kind of what we're testing the wheels on here.
Which is interesting because you do see investors with a large appetite for alternative types of investments. I mean, that's really been a key growth area. You're looking to diversify your portfolios and not necessarily be so correlative to traditional asset classes.
Right, and it also depends on their risk appetite, right?
Of course.
So it might be a case where I want to balance my portfolio and have something on the riskier end. So I'm willing to indulge in tokenized assets that represent, again, something like a revenue stream or a developing country's real estate. And so, yeah, for 5% of my portfolio, 1% of my portfolio, that's of interest. And the tokenization allows me to do that very easily and incorporate that. And then maybe you can even build financial tools on top of that and say, okay, based on a particular risk appetite or return profile that you're looking for, I'll take tokens from this basket, this basket, this basket, and this basket to represent that model that the financial model return or risk appetite that you've given me. The tokens make that much easier to do.
Right. SBI more specifically, continuing to expand its footprint throughout Asia. What's the story there? Are there specific regions that you're looking to target?
Well, we have it's a good question. We have the advantage that SBI, particularly in the Asian region, has a number of footholds. Basically, almost every country in Asia, we have some representation. Secondarily, we fostered some, obviously we have a close connection with Japan. One of the reasons that our office was opened in Singapore was because of the different regulatory environment in Singapore as it pertains to security tokens versus, let's say, cryptocurrency. So we have a separate company in Japan that focuses more on crypto because the regulatory environment at that time was friendlier to crypto. Singapore was much more supportive of security tokens. We're based here. We've managed to open some distribution channels with the likes of Thailand. Mm-hmm. We have a connection with Switzerland through both SDX, which is the digital arm of SIX, mm-hmm. But we also have a couple other companies that we're working with out of the European Union, particularly in Switzerland. We're now expanding, or at least having some conversations about expansion through Hong Kong, Korea. We recently announced that we have an investment from a company in Korea that has invested in us. And there's a couple other things that are in the works that we can't discuss just yet.
Right, well, hopefully next year at SmartCon.
Hopefully.
All right, appreciate the insight, Tom. Thanks for joining us on Trade Talks. Right. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.